is there a point where in the equity space we become more like Macy's and not Target, where GDP and consumer pulse gives way to moldy earnings?
I think that's the big concern, right? Because what you've seen out of the sort of discount retailers, if you will, is good numbers. And Target had a lot of problems coming out of the pandemic with an inventory issue, and it took them some time to work through that, and now they're back on track. But with Macy's, it's hard to tell if it's just Macy's, but if that middle consumer is really starting to feel the pinch on both sides, I think you start to worry about earnings, and that becomes a question with equity levels where they are.
We had some. I think the earnings come out of the second quarter were pretty solid. What did you take away from the second quarter earnings and maybe some of the forecast going forward?
Well, I'm going to give a big plug to Tom Keene's Corporations Will Adapt.
Yes,
and they did adapt.
Is Sparta listening?
No.
She's probably up at 92.9.
Yes.
In Boston.
Working on that.
Working on the painting, getting the curtains in correct, and all that. Because after Labor Day, we're on a big new single up in Boston.
I know. It's huge. Big stick.
Did you hear she said that? That's great.
Yeah.
Okay,
so,
continue.
our earnings, what's your takeaway?
Well, I think that the big concern, and it was a concern that we shared, quite honestly, was that margins were going to have a problem as inflation came down, because if margins were accelerating because of inflation and corporations were capturing that, then they were going to see a bit of a margin squeeze. So far, that has yet to materialize, and in fact, the expectation for margins going into 2025 and the back half of 2024 are pretty decent.
Okay.
So that's where your earnings have been able to be okay. The question is if the top line starts to get affected even more, that could be an issue.